Hey, welcome to the Mortgage Minute for the end of March. Listen, today I want to talk about record low interest rates driving what some would say is an overheated real estate market. We're seeing this everywhere across Canada. I'm working with clients in Ottawa, Moncton, Toronto, Vancouver, and in all these Saskatchewan, and all these different markets that I'm working with clients in. We're seeing multiple offers, houses going over lists, etc. One of the big questions is, well, eventually this has got to slow down, got to come to an end. Here's an article that suggests in Vancouver, at least, that maybe it's just a prelude to what's happening or what's about to come when COVID and the pandemic finally relaxes. The suggestion here is that when immigration is allowed to come into the market, places like Vancouver and Toronto are going to heat up even more. And what you're seeing now may be just the tip of the iceberg. I'm not saying it is or it's not, but it certainly makes for an interesting conversation of what's going to happen when 400,000 immigrants come into cities like Vancouver and Toronto, and you've got a heated real estate market that's might just get hotter, fueled by low interest rates. We saw the record lows kind of dissipate, and we saw bond yields start to rise, and that led to long-term fixed rates going up. And then the U.S. Fed signaled that they're going to have low rates for years to come. And this was a very interesting thing. They said they're not going to change interest rates. They're going to keep interest rates low in the United States until the year 2024. And when that happened, that kind of cooled off the bond yields. So yield pricing, and we just saw last week, just in the past week, it's gone from a 5-year bond yield from 1% down to 0.90. So a little softening on the bond yields. The rise in bond yields may see an end to this recent rise in long-term fixed rates. So again, it makes you say, should I take a fixed rate? Should I take a variable rate? Well, here's my suggestion. If you're a first-time home buyer, fixed rate. If you're buying property for an investment, remember, there's different types of mortgages. Insured, insurable, uninsurable. Rental properties are uninsurable. Therefore, they typically have a 20 basis point surcharge on the interest rate. Right now, your variable rate is a better product for an investment property. So again, depending on what your situation is, give me a call. In the meantime, if you're wondering, hey, I'm paying 3.29% on my 5-year fixed rate mortgage, I've got 18 months left. Should I break it, pay the penalty, and is it better to get a cheaper, lower rate today? Well, we've just come out with a new analyzer on the app, which I'll give you a link to, and you can do all the math yourself. You can build in different scenarios. It's just a fantastic little tool on the mobile app that can help you analyze whether it makes sense for you to break that mortgage, pay the penalty, and whether you're going to save money or not. Again, we put the tools right in the palm of your hand. That's the idea there. So regardless of what your situation is, whether you're a first-time home buyer, you know somebody that is, or you're out there shopping for yourself or looking to renew, refinance, give me a call, send me an email, peter@peterkinch.com. Happy to analyze your situation because every one of your situations is unique. Folks, that's the Mortgage Minute for this week. We look forward to talking to you soon. In the meantime, have an awesome week and a great Easter holiday this upcoming weekend. Cheers. Bye for now.